What's good, y'all? Welcome back, welcome back, welcome back. APX trading stream, man, you already know. This is where you come and get your chart setups, economics, and earnings, man. So today we gonna obviously go over chart setups. Honestly, I'm gonna be honest. Today I think it would be very, very wise to just sit on your hands and not really do anything because we got the Fed meeting tomorrow. So I think it's wise if we don't trade into that. So but I mean the chart setups are still a chart setup, so we're gonna look at them for sure. Get that practice in. But but Palantir dropped on good earnings. Hims dropped on, I think they missed the earnings, but they beat revenue. But I never cared about earnings. Don't care about earnings. I care about that revenue increasing. So and it says 4 C's and $1.5 billion hit. And Ford is pulling their outlook on tariffs. Well, they pulling their guidance because of tariffs, so that's not good. But I mean, it's Ford. I don't think we should be investing in Ford anyway. So you're not really tripping off of Ford, but it does. I think it does go to just make a bigger point about tariffs in general. We're gonna have to the execution on tariffs. We're just gonna have to do it better. Supposedly, a deal with India is going to get made pretty soon. So definitely, looking forward to see that. If that happens, that would definitely send the market higher, I think. Just having the actual deal done, that will give the market some positivity. And Tesla sales are down crazy. Spain, Germany, Belgium, France, UK, Denmark, Netherlands, Sweden, I think it's all down over 20% or more in Europe. So I think it just goes to show no matter how big you are as a CEO, you can damage your brand. You can have all the money in the world and you can still damage your brand. So I think it's good to have. You gotta have high character. You gotta have high character. It's important to pay attention to the CEO of your company. I said this before. The more, well, I'm not gonna say that here, but if the CEO is volatile, then the asset is going to be volatile. So I think Alex Karp is a volatile CEO. You see some volatility in Palantir. It's down 8.5%. Now that's not directly attributed to him, obviously, for this specific time, but just in the future, Palantir is still going to continue to have that volatility in it because you have a volatile CEO. So that's also important. Like, you don't hear nothing about AVGO. You don't hear nothing about their CEO or Eli Lilly or Novo, or many other companies that are amazing, right? So you just want to make sure that you not only invest in good companies, But especially, I think as a retail investor, it's important to invest in companies. If you hold it for the long term, I think it's very important for you to invest in companies that have really good leadership. That's got to have really good leadership. But I'm gonna go ahead and pull the charts up. Let's go over some earnings. Um, um, so for earnings today, we had Celsius, Datadog, Ferrari, DoorDash, um, CEG is one that I know people know a lot. CEG, I think that's an energy company, one of the slept on energy companies. Um, that's pretty much it. Well, yeah, Marriott and DocuSign, but are the ones we interested in. That's pretty much it. But you got AMD, ANET, Rivian, SMCI, and Tempest AI. They are important after the bell. So it's going to be very very important to watch them. Um, Ferrari beat on earnings and revenue. Not surprised. A great company, luxury type of company. That's not a car company to me. That's a luxury company, and the consumer that they have, the demand that they have for the product. I think I was like breaking down race probably like 2 years ago, and I think they said their revenue for the next like 3 years was already baked in, just off of the wait list for the cars, because they only make a certain amount of cars. So if you only make a certain amount of cars, that's I think that's a really good business model. If you only make a certain amount of a product, you're gonna sell out, and if it's amazing, people want it, you're gonna sell out each year. Um, Now the thing is, with that, you gotta have really good finances, because a company like Race, if they have people paying ahead of time for their product, so you may be paying like 300,000 for a Ferrari, right? But you may not get it till 2026 or 2027. Ferrari, that's technically revenue ahead of the product. So you just have to make sure that you're being careful and really managing that money, really being disciplined with that money on the financial aspect. But I think, I mean, they've done amazing. So, but Data Dog beat on earnings and revenue, so that was good. I'm not like the biggest fan of Data Dog, but it's kind of been beaten down for a little bit. So if you like it, hold for a 5-year period. Celsius, they missed on earnings and revenue, so I'm sure they're gonna drop. Um, shall see. The pre-market, they're not down that much, and this like drop here is nothing crazy. I mean, look how much they ran up. I mean, if you got in at the low, what was this, 2020? Lord. I mean, you can't. Oh my God. I don't even want to look at this. 9,000% almost. So um and Celsius is actually I like Celsius. I like Celsius personally. Like the drink itself, I like Celsius. But um I'm having trouble figuring out why this company is a lot more volatile than Monster. It, but as a company, I don't like them. They profit margin just too unstable. So, but yeah. Can I change my colors? A second. A second. Mm, yep, that's good. This is weird. Green used to be my favorite color. All right. All right, back on it. But yeah, so Celsius they missed, double miss. Marriott, see how Marriott doing. Um and Marriott, like Marriott and Hilton, those two slept on companies. They got really good profit margins. I think their profit margins like 35% or something like that. Or 23%, I think. So they're like financial efficiency is really, really good. But especially to be in a business where like you got to continuously, I don't want to say continuously update the building, but you have a lot of, it's a lot that comes with buildings and issues. So, um, but they have an earnings call right now, but they beat on revenue and they beat on earnings. So, that's good for them. And then I don't think I would ever see EG. They missed on earnings, but they beat on revenue by 24%. So they're doing pretty well. But tomorrow we got Uber, Disney, Novo, Vistra, Gold, Arm, Apple 11, Carl Libre, IonQ, Oxy, Carvana, AXON, AMC, Fortinet, Bros, Zillow, Sunrun. Let's look at Bros real quick because I know it fell apart. I'm sure it fell off for a moment. Yeah, it's good though. Um, Mm, mm. I mean, somebody likes. This- mm, okay, let's see. Um, see what tripads I can find. I like Mondelez. I do like Mondelez. Going long. If we come back down here to go long, one touch, two touch, third touch, just to be a fourth touch. Plus, you got the 400-day moving average coming up too. Um, that will help. If we look at Qualcomm, I would rather go short on Qualcomm given the environment. So waiting for them to come back up here, push up. Plus, you got the 200-day moving average there to help act as resistance, as like a wall. If you look at Verizon, I want to go long on Verizon once we come down here. And how I'm trying to do my decision making is basically whether to go long or short. It's basically risk on versus risk off. So if you Verizon is a risk off type of company. It's more like a need based company. People need it. So even when the market comes down, it's gonna go up. So it's kind of like waste management, right? Something you need, it's not gonna go away. So that's the type of company that you invest in when the market is down. Um, so in during this time where the market is uncertain for the time being, um, Verizon on a risk off trade to the upside would be good. Gold has continued to push up. If you look at gold, you can look to exit today if you are in gold because we're gapping up again to about 312 here. We might hit all-time highs again today, but I mean we don't have to be greedy. We got it, down here around 96, 97. You don't got to be greedy. You can take profit at 312 when the market opens. So um yeah. Caterpillar is one I've been waiting on. I like Caterpillar. For a third trend line touch. Um FedEx, I like. I needed to come up here though. 200-day downtrend, and we good. So if you look at long-term basis, 1, 2, 3, 4 touches, come up, have a fifth touch. It continued to push down. But let me see if I can find something else. See if I can find some more trades. Hmm. I'm not gonna lie, there's a few companies I wish I could have got back. Mm, mm. FOMO is a real thing. FOMO is like a real thing. Like very, I even still like. I'm good at neglecting it, but like sometimes I look at a chart and I'm just like, dang, 9,000%, and I'm just seeing like it's not necessarily like I missed it. It's just I didn't find it fast enough. That's how I like to look at it. I didn't find it fast enough, so that's how I be sometimes. But let's see. Um, see what we got. Um, the U.S. is not a good place to hide in. Look, Apple should be dropping to the downside today. I'm not the one that's to short Apple. No. Um, um, Dexcom. Anybody know Dexcom? Dexcom? DXCM? Ever heard of them? What they do? Dexcom. GILD. We got about 5 minutes. 5 minutes till market open. I mean, at the moment, I'm not seeing much more. I think we kind of already picked the cream of the crop when it comes to these chart patterns. But um, the market is due for a pullback this week for sure. I mean, we ran up 9 days in a row. So you gotta know you gonna pull back. Have to know. We're not gonna go up forever. We're not gonna go forever. And then we also we had I think it was like history in 24 years. The longest win streak in 24 years, going up 9 days in a row. And it's crazy because it happened in the bear market, right? You would think that it would happen in the bull market, but it happened in the bear market. So, so that's interesting. And I think you're technically speaking, you get the biggest rallies during bear markets. Yep. Yep. Maybe PayX, Paychecks, Paychecks. Never heard of this company before. Anybody know what Paychecks is? Paychecks, PAYX. I don't know what they do. I do not know what they do. But they have like a pattern. And why is Pepsi down so much? That's why. So Pepsi's down, but Coca-Cola is up. Because that makes sense, right? And we are down 1.3% on NASDAQ futures and almost 1% on S&P futures. But um but let's get to it. Market open. Um let's see. See gold is pushing up higher. So that's good. Um But yeah, gold should probably hit or at least maybe reaches all-time high today, potentially. If you look at IBM, this is why I would have wanted to trade this company to the upside because even with the pattern, the previous trend is up. So they're looking for it. Ford is $10. Ford is literally $10. Man, let's see. Um, let's see. Maybe schedule. Let's not want us to look at IBM today. Let's see. Yeah, IBM breakout and then retest. Verizon pushing up. Looking the breakout potentially. And then Mondele's got to come down anyway because they got a gap to fill. PILD PX. This is why it's good to have two platforms. If one is messing up, you can always go to the other one. But PayX. So if I type in PayX, chart is up and to the right. I've never heard of this company. I don't know what they do, but they got a good chart. They have a good chart. But looking at this, I would definitely want to go long on this company because the trend is up. So I want to stay with the trend and trade to the upside. Got away from the pullback a little bit. But this is PayX. So I like that one. GILD. I think it's what Gilead. 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 Sciences. Gilead. 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 I don't know. I don't know. But I like PayX. I like Qualcomm. Qualcomm is good. Qualcomm is good. Let's go. Let's actually go IBM. I will say, I honestly think, I think the market is pushing down now. I think this is just gonna be. I think this is gonna be a day of volatility where we might start off red, but I don't think we're gonna close that bad because everybody's waiting to see what the Fed pretty much says. So I think we might get off the lows of the session, but this is IBM and just wanted to trade to the upside. We just didn't get that last touch that we wanted. But if I look on the weekly time frame, the chart, oh my God, like this is insane. This is insane. Like, okay, imagine in 2013 being told IBM, yeah, you know IBM gonna go from $206 to 87, and then but it's gonna recover though. You're gonna be okay. You're gonna be okay. I wouldn't have held it that long. I'm not gonna lie. Mm-mm. You got 3 months with me. 3 months. 3 months. If you're not doing what you're supposed to do, you just get out of the portfolio. So to hold this for what, 10 years, a 10-year period, really 11, to start seeing like the bounce back. I mean, if you work for a company, you still losing money on shares because you get them at a 15% discount. Sigh. Talk about sigh. Big sigh. Big sigh. But um yeah, IBM. Let's see. Hey, quit playing with ah, quit playing with quit playing with that one company, man. Quit playing with that one company. Quit playing with them. They are carrying right now. They are carrying right now. They are carrying right now. You know, you got a few companies that just, they like to, you know what I mean? They like to carry. My bad. I know. I gotta entertain you. I'm sorry. I've been real chill. My bad. Yeah, I got two sides. I got my like playful side that I just be playing all the time. Then I got my side where I just be chill. I just be nice. I'm gonna have a mixture. My bad, but it's we getting carried right now. We are getting carried right now. How LeBron should have carried the Lakers. Come on, dude. Luca, what's going on? And is him. I know he's good. He's young. He like that. He 23. It's hard. It's hard. It's hard to keep up with new talent. I get it, but I don't know. I don't know. Come on, man. But um, um, finally this thing loaded. Finally. But yeah. What we think AMD gonna do? Man, what do we think AMD is going to do? We all know. The Lord. Oh my God. See, you know what? Yeah, this is insane. This is insane. I will say this is insane. Let's look at NVIDIA real quick. See what they got going on. Um, megaphone, megaphone. I call this a flashlight pattern. Call it whatever you want to call it. Megaphone, flashlight. The technical definition is a broadening, is broadening. But um, hmm, I'm just thinking, just thinking. But yeah, man. Mm, 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 mm. Um, golly, Lord. Mm. This thing is just pushing. But yeah, man, Nvidia, when they gonna free my boy Jensen? Let Jensen out them chains, man. Oh, inflation. Okay, so we talk about active investing, right? So I bought some deodorant yesterday. Anybody want to guess how much it cost? This ain't fair. This is not fair. Anybody want to guess how much it cost? It's $12. Now, I'm gonna assume. Isn't that a lot? Isn't that high for deodorant? $12. Now, do I care? I don't really care about the cost because, like, okay, you buy the deodorant, $12 for the amount of use you're gonna get out of it is not that bad. That's not bad at all, right? If you're looking for like price compared to value, I can't argue with it. But like compared to what, like just be like paying attention compared to what it used to be, I think I think half that maybe. I don't know. Yeah, this is not right. How we gonna live? No, I'm playing. But no, real serious note, like I think it does go to show like how kind of everything is going up. So gotta make sure we invest in, have to make sure we are investing, man. Um, gotta stay diligent in what we're doing. Have to, continue, make sure that we are um, make sure we're doing amazing. But yeah, man. Let's look at Tesla. Let's look at Tesla. You know, you know, um, I truly think, despite everything that was said, how it was not true, right? I truly think Tesla does need a new CEO. But the thing is, I mean, can like okay, if Tesla gets a new CEO and Elon is still like the has the same amount of power, or similar, because he it's still his company at the end of the day, so he's gonna have like a lot of say so. Um, I don't know if that's necessarily like a good thing to have a new CEO, because Elon just gonna come in there and boss you around and micromanage you all the time. Who wants to do that? I wouldn't. I wouldn't. So I mean, you can be looking for a new CEO, but I don't know if there's anybody who would even want to take on that role, given the environment that we're in. It's already hard. If you are a business owner right now, your product needs to be like A1. Like I'm talking about, your customer service needs to be good. Your product, the value, communication, you got to be on point. You got to be on point, because this is like crunch time. Like everything is getting tight, so people are looking for the utmost value in what they are. We don't have like loose money, or we do, right? Always do, but it's less of it. So people are being more conscious of how they're spending the dollar, where they're spending the dollar, they're paying attention to what value. It's not like the pandemic where you can just buy everything and you just don't care, right? Um, I think more people are paying attention to their spending habits. So you're just going to have to be exceptional. So like a lot of these companies, I'm looking for when I'm investing, I'm looking for exceptionalism. Like you either need to be the best, or you need to be tied in with the best. You need to have, if you're not the best, you need to be tied in. Just like Nancy Pelosi is tied in. Her husband was a former hedge fund manager, right? So how she has amazing trades and amazing investments, she's tied in. And that is leading to great performance for her. So I need a company to do the same thing. Like Nancy Pelosi can't have a higher profit margin than the company that I'm investing in. Tesla, Tesla, get it together. So, but yeah, um, well, let's look at SPY. It's always good to look at SPY. I think you should look at SPY if you're looking for technical analysis. I think you should definitely look at SPY every day and look at QQQ every day, because that's the overall market, right? So I think that would be definitely beneficial to you. But we can see here, I mean, we were due for a pullback again, but you can see like the levels. We didn't hit it on SPY, but if you look at Q, and I gave you guys a gem yesterday. I don't know if y'all paying attention or not, but usually one is gonna lead the other. So SPY is gonna lead QQQ, or QQQ is gonna lead SPY. During this time in turmoil, QQQ is gonna lead the market. So you see, we came up to this. It's like a sell wall, right? So this was a previous high. Um, in a downtrend, which is not acting as resistance. So we came close to this level, but you see we are rejecting from it. So this is basic market structure. So if you take the EMAs off, you take everything off, right? And you just look at basic market structure. A lot of times we just get caught up and use the indicators, Fibonacci, right? Whatever y'all like to use, MACD, RSI. You gotta know basic market structure. So I think you should be able to trade. That's why I like patterns, because patterns are just market structure. You should be able to trade and invest without using any indicators. So you should always think worst case scenario. What if the person who makes the indicator takes it away from you? So I made an indicator, right? I'm not gonna take it. But I have to think like, okay, if somebody took away moving averages, if I could not use them no more, can I still trade and can I still invest in the market? Yes. If somebody took away Fibonacci, if somebody took away MACD, if somebody took away Bollinger Bands, if somebody took away Elliott waves, right? All the indicators, you still have to know how to do it without that. And that's how you start off learning. You start off learning without it. So, um, but just knowing like basic market structure is important. Like basic support levels, resistance levels, uptrend, downtrend, range of market. You got 90%. You got 90. Really, that's all you need to know. If you volume, that's all you need to know. Really simple. Downtrend 1, 2. We had this third touch. We broke it. Break up. Retest. Come up higher. This is time for us to pull back. Retest, and we're gonna come up and test this level again. You know, depending on what we get tomorrow, we might come down to this level here. It's two scenarios. We might come down to this level here again and retest it, or we're gonna push up higher. If the market takes the data well, we're gonna push up higher to this level, and probably break through it, and then look to retest. And then the next level that we would pull back to would be right around here. So when we push higher, we're gonna hit this level, right? Retest here and then push up. This is basic market structure. This is without the EMAs. This is without, you know what I mean? So I think sometimes you can get caught up. Like I like my personal indicator, my personal one, right? I like it. I like it. It's I don't know. Psychologically, it helps. Psychologically, it helps me. But again, regardless, sometimes this can just be too much. So take it off, look at regular market structure. And then to be honest, this looks a lot simpler than what I have. A lot simpler, like on a simplicity aspect of it. So I wonder if I can use it. Nah, I can't. We gonna figure. We gonna figure. But this is just basic market structure. So um so but yep, but economics is gonna be the catalyst. FOMC is gonna be the catalyst. Palantir, what happened? Now I did say this. I was like, you know, technically this would be a level for you to short because it is coming to a previous high, but I'm not gonna be the one to do it. And I would if I had to do it all over again, I would make the same decision. I'll make the same decision. I would make the same decision to not short it. I don't care that it dropped that much. What if it didn't? Yeah. And then they hit it. I mean, they hit an all-time high. They hit 128. So I mean, they did hit an all-time high technically. They just pulled back. Um, they did it after hours. But I mean, it's time for them to cool. Keep telling y'all, something runs. It doesn't matter what time period it is. 2 hour, 5 minute, week, month. If it it's going You know, like you throw a basketball up in the air, or you throw a football up in the air, and then it just, you know what I mean. So yeah, that's how it be. That's how it be. When the stock just, it's going. So, but Palantir, we like Palantir. Not morally, but as an investor, we like Palantir. Um, and Scott Bessent is Oh man, this is right now. He about to testify before the House panel. What is going on? What is going on? What is going on? But let's look at Apple. So somebody help this company, please. I wonder. Okay. Um, somebody help Apple, please. Y'all think if we all sent the email to Apple, if we all sent the email to Apple saying the same thing that they'll make some changes? Maybe, possibly, potentially. Hmm. One, two, third touch. Uh, that's the thing with these bars. I got to get used to these bars. So I think the left side is the open, and the right side is the close. Yeah, I think. I think. Yeah. As a five. Wait. Yeah. Left side is the open, right side is the close. Yep. But sorry. Let's look at economics. I don't think we had really much anything. I mean, we had trade deficit. Trade deficit. Let's say Tuesday. Come on, man. Let's say April 29th. Get it. Come on, get it together. This is this ain't right. There we go. There we go. Okay. Uh so okay. Looking at this is why you need to look at a chart. The chart of the US trade deficit is continuously getting worse and worse and worse and worse. Tariffs, I don't care about tariffs. I do not care about tariffs. Never did. I don't care about tariffs. This is not tariffs is not worse than COVID. And the trade, like, so, but that's all we have for economics. Today, trade deficit, and then obviously you guys know Jerome Powell speaks tomorrow. So we're gonna see. Um but yeah. And then if I'm looking at the top, Tesla is actually the top stock in volume. So we're definitely gonna see a move in Tesla soon to the upside or downside. Um and we just ranging. We just ranging. Like we stuck in this box. We've been stuck in this box for a minute. For the past what I think few days. No, actually few last 2 weeks. Yeah, so since April 25th, we kind of been stuck there. But um Intel, government, y'all really don't need to be wasting money. Y'all trying to save Intel. Come on, dog. What type of waste of investment is that? But Intel is gonna move soon. I can already see this pattern. Um, here, here, they're gonna have some type of move to the upside or downside. Um, and I mean, I'm not gonna say I just dislike Intel because I mean, you can make money on Intel. You can make money on Intel, you know. But I just no, just no. But let's look at MicroStrategy. MicroStrategy been running. Um, if it was definitely one company that I wish I would have um maybe like talked about a little bit more, or a company I would have been bigger on. Like I just I just don't I personally I don't understand the business model enough for me to be comfortable investing in it. I want to look at this like essentially as just Bitcoin, but I mean, I don't think that would be necessarily correct because at the end of the day, they have to have, so they're buying Bitcoin, right? Which gives them value, but I don't know. I don't know. I just don't understand it enough for me to want to invest in MicroStrategy. I mean, I don't need a reason. Technically, 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 I don't need a reason. But I mean, hmm, it's directly to the coin instead of messing with the, like, I get it. Like you need a company um on the you need a company on the stock market. Like you got all the institutions are moving late. That's why I like Robinhood. Robinhood alone, and I'm not big on investing in brokerage platforms, but Robinhood, I would invest in Robinhood just because they're innovating very, very fast. I think they actually have the consumers. Um, I think they actually care about the consumer, like the person that they're trying to help. I think they actually care about them. Um, and they're innovating really, really fast, like very. Um, um, and I've been seeing all them apps, all them all the advertising, Airbnb, they advertising, Robinhood, Hims, they advertising. I forgot what other company I noticed, but they advertising. Charles Schwab is advertising. Yep, If we look at the VIX, because we haven't talked about the VIX in a while, um, we're sitting at 24 right now. We're sitting at 24, which is still pretty high, right? It's still pretty high. We still kind of settling down. And really, all the VIX is just a measure of uncertainty, honestly. But I mean, we pulling back, so the market is a little bit stable. But we probably gonna have another spike up like this year. So I would not, um, if I was investing, I would definitely um, just know that we're gonna have another spike up again. That's my theory. That is my theory. That is my theory. So, um, but yeah. Um, let's see. Um, what other companies we got? PayX, 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 PayX. So Scott Bessent, he said Trump's economic agenda is already bearing fruit. How true that is, I don't know. But if you look at PayX, I do like going long on this company if they get down here. So this would be like, let me see what they do. Let's see. So PayX or Paychecks. It makes me upset every time I see this. So it says they provide integrated human capital management solutions. Um, so for payroll benefits, human resources, insurance services for small and medium-sized businesses in the United States, Europe, and India. Um, so they're kind of like ADP. They're like ADP, slipping on. Um, yeah, they are like the second or no third in their industry. So, that would be So that's what financial services. This might be a risk on type of company. Let's go, Nico, my guy in chat. Let's go. Let's go. Shout out to my guy, man. He be turning me up. Always, always. Every time we talk, man, it's always some fire. It's always some fire. It's always some fire, man. Always some fire. Every time. Every time. But yeah. Mm, mm, mm. Yeah, this is insane. Um, but Colombia cuts 180 staff under intense strain of U.S. cuts. Where are all the jobs at? Where are the jobs? So if I just be confused, I'm confused. How job numbers look, how they look. Are they being reported as they're being reported? But all of these companies, like it's not just one. It'll be different if if a few companies did it. All of the big companies are doing it. And I know small businesses run the world or run United States. They keep the United States alive. But you can't be like, okay, 20,000 people or 40,000 people. It's not a lot. Can't be like, okay, if a company does it 20,000, 20,000, 20,000, 37 times, that's 60,000. And the actual data and statistics say that people are, if you are unemployed, it says unemployment is like people are staying unemployed longer. So I just don't know. Um, hmm, I think it's just interesting. You I think in the next quarter, I think we definitely gonna get the real data for sure. But mm, I just want the real numbers. You know what I mean? So we can move accordingly. You know, it would be nice to have some good data. But um, make sure you guys are if you are Apex, I'm gonna send you guys these charts. But if you are not, um, I'm gonna take a picture of it. But if you want to learn how to chart, if you want to learn how to long term invest, if you want to learn how to trade, And you can join APX. Go to apx-partners.com/tech. It's going to be a 50% long-term investment. I will say there's always in any market, there's always areas for you to make money, no matter what. Bull market, bear market, and there's always ways. There's ways, just like there's ways for you to lose money. You can lose money in a bull market. Just because the market is going up doesn't mean the company that you're investing in is going up. If you're not in a good company, or if it's not, if institutions are not pushing it up, if they're not putting capital into that company, or retail investors are not putting capital into the company, it's just going to be flat. Um, so it's always money to be made for sure. To the upside, in bull markets, you can make money to the downside. In bear markets, you can make money to the downside. Um, in bull markets, you can make money to the upside. In bear markets, you can make money to the upside. But it's crazy for us to, what are we? The S&P is down year to date. I mean, we're down at what, negative 4%? We're down negative 4%, right? Um, so for us to go from negative 20% to go up to, excuse me, to negative 4, I mean, you, what more can you ask for? What more can you ask for? Um, QQQ, so NASDAQ is down 5.7%. Um, coming back from what, negative 25%, I think. Kathy Wood, let's see what she does. She just sold a stock. Let's see. I hope it's not Palantir. I hope it's not Palantir. It just be the timing of when they be exiting, just be off. But I get it, as an institution, you can't exit. You can't exit like a retail investor. You got to do it in sequences. So I get it. I get it. And of course, it was Palantir. Of course. Stop. Okay. I think I want to help everybody. I think if institutions stopped focusing, you have to sit down and you have to tell your clients what this is. You can't like let them run you. You need to have a bilateral partnership with your customer and your mission. And you need to come in between and have an agreement. You can't just let them, just because someone wants monthly returns or quarterly returns doesn't mean that you technically need to give them that if that's not your vision. But she sold 8.8 million of Palantir stock before earnings. What percent is she up on Palantir? How much in taxes is she going to have to pay on that? So if she's up 100%, she's going to have to pay 35% in taxes, I'm going to assume. So now that's only 65%. If cut that in half if she's up 50%. So what, 32.5%? So you were up 50% and now you just cut it down to 32.5%. That's if you bought at a great price, if you were up 50%, right? Um just hold for the long term. Just hold. Just like hold. I keep saying it. The likelihood of you losing money on a stock, no matter where you buy it, you could buy it at the high. Buy it at a high, have a recession. The average time period of a recession is not, I think it's what, 9 to 16 months. You could buy a stock at the top during a recession. bleed, and then a year later, not like the chances of you losing money is 25% if you hold a stock for a year. I keep saying that. I keep saying that. So if that's what the probabilities are, because everything is probability. All this is math, probability, statistics. Get a stats book, read the stats book, and try to apply it to the market. But if those are my odds, if I only have 25% chance of losing money, if I hold it less than a year, no matter where I buy it, and you combine that with buying at a great price, and then Palantir, what are you selling Palantir for? What was the reason for selling Palantir and not holding it? Palantir could drop 50%. I'm not gonna care. You should you shouldn't really be down. You shouldn't really be down. Lower your cost basis, build you a base, and when it runs up again, I have it going to 300. 300. 300 over a long term. It's not even at 200. It's not even at 150. It's not even at $100. It's not even at $100. So to go from where it is now to 300 over what maybe a 5-year period, hold it for 5 years. Hold it for 5 years. So that's like if you have a car and it upgrades every year. You might have some rough patches where you got to update the car. You got to work on it. It may be down. But if it was reverse and cars actually got better as time went on, instead of worse. And that's another conversation we're gonna have too one day. Because I used to drive a forklift. You can just you can just switch the battery out in the forklift, and then it just operates regularly. It's like a big Lego. So why are cars not the same? You gotta make sure that car industry is funded, right? Because technically, even with AI, we gotta have it's a bigger conversations to be had. With AI, you have to look at what is not needed anymore. So when you had the calculator, there used to just be people who are naturally gifted or smart at math until you had the calculator. And everybody could do it, right? Um, then you had the scientific calculator. Then you just have new. So we used to if you used to ride a horse, right? And you got a car. So like it there's a conversation to be had of what is needed. And if I'm looking at like cars with AI, you don't need an engine. You don't need an engine. You do not need all of those parts in a car. You don't. But I mean, you do need capital put in that sector and industry to keep it alive. Because you can't just like erase it immediately. A lot of people will lose too much money at once. So I'm trying to think of a logical, institutionalized way to transition that. And it's Apple's fault. It's Apple's fault. Apple. Is you gotta take the blame. Because I think if Apple would have had that car, we would have had this transition a lot faster. I think we had a transition a lot faster. So like all the stuff that we watched, this movie, like all the stuff we watched. My mom, she talked about the Jetsons. She said I haven't watched it, but she talks about the Jetsons. She's like, well, we're living the Jetsons right now. So I need to go watch it. But I don't know if you guys know that movie or not, but the Jetsons. So I'm gonna have to go watch it. But no, like all that stuff in the movies, that stuff is real. I always said, where do you think if they are creating a movie, where do you think they're getting the ideas from? Somebody already has done it, or someone has thought of it, which means it's gonna come into fruition. So when you have a thought, it like goes into the air, right? So all you have all these thoughts and they just go into the air, right? And then you choose the one that you act on. So you pick one, act on it, do the steps in place, and then it comes to fruition. So like all the movies and stuff, I told you Ready Player One, Wally, iRobot, Subservience is one, Bionic is one that you should watch. And they're all on Netflix. Invest in Netflix, right? Since we watching it. Um, but we'll see, man. We'll see what we got tomorrow with economics or Jerome Powell speaking. If I had to give a prediction, let me think. Kind of on the fence with this. He wasn't. He the last time he did say that the tariff level was kind of, you know, on it was higher than what they even thought, and the market did not care. I think now I think he's just going to say there is uncertainty, just because they don't know what the policy is. How hard is his job to give us an outlook when he doesn't even know what the policy is to make an educated decision on what to speak or what to talk about? So I would not like to have his job at the moment. It would be tough, but um I think he'll give a calm tone as always. A calm tone as always. Um, and Scott Bessent, he just said that many parties have good offers, but no China talks yet. So the market, okay, okay. Look how crazy this is. Is this not insane? If you paying attention, the market. So when y'all asking me, is the stock going to drop? Yes, it doesn't need a reason. It don't technically it doesn't need a reason. We did not. The market went from -20% to -4 off of because Scott Bessent said that the trade war with China is unsustainable. Unsustainable. So he's telling you what we're currently doing right now with the 145% tariffs, right, is unsustainable. Yet we have not had a talk with China. We still not haven't had we still have not had a talk with China. And that was what, 3 weeks ago? 3, 4, almost a month ago. So the market doesn't go off of like. So there's a question to be asked about how important is fundamentals? How important are fundamentals? Fundamentally, our economy is in shambles. GDP negative, political landscape not good at all. World conflict resolution not good at all. Innovation is there, but it's not good enough. China has less resources and they're competing at the same level as us. It's not good at all. If you have more resources than somebody, um, this is like an underdeveloped school who doesn't have all the equipment, all the tools, all the stuff that would get them, let's say technically get them on the same level as like a higher school. And the higher school has all the technology, all the equipment, right? And then that underdeveloped school, they still beat you. So that's what's going on right now. That's what's going on right now. So, but um, yeah, yeah. Um, but that's all I got for today, man. Like always, I appreciate y'all so much for pulling up to the stream. Um, we're gonna be back again tomorrow to listen to listen to Jerome Powell. And Scott Bessent, he says nothing in data is indicating that the U.S. is in a recession. I'm gonna let it be. I'm gonna let it go. But I will be back tomorrow, same time, 8 a.m. Central Time to 9:30 a.m. Central Time. Um, Tricetters, economics, earnings, news, whatever. We saw that Skechers got acquired um the other day, so that was that was some good news. But um, but yeah, yeah, that's all I got, man. Again, I appreciate you guys for pulling up, and I will see you guys tomorrow.